So yes, today we'll be looking at making tax digital for income tax. A little bit about myself to begin with. I've been at Go Simple Tax now for over a year and a half. I've been in the tax industry for about 12 years altogether, and I am currently working with Go Simple Tax to help develop new services. We're looking at making tax digital and the platform, what we'll be using, and also making sure that we stay up to date with requirements with HMRC. So, looking at today's content, we will be looking at what is making tax digital for income tax. Basically, what is it, who is affected, and when does it start? We'll look at the pilot scheme, what that is, and who can join. We'll look at the transition into MTD, such as digital record keeping, the requirements and adjustment to change. Then we'll go into deadlines and payments, and then we will go into a conclusion, followed by a demo, and then hopefully have some time left for a Q&A session at the end. So before we even start, we have a poll. So I do believe that Leanne should be able to access the polls and stick that on screen now. If you can do that, Leanne, please. There we go.
Yeah, can you see that?
Yeah. It's on my screen now that it started. So if everyone just answers the question on a scale of 1 to 5, 1 being not very confident and 5 being very competent, how do you feel about offering making tax digital services to your clients? So there's 40 attendees. I'll wait until the majority have voted, and then we will have a look. So we've currently got around about 2/3 voting, if the other 13 can vote. And currently on about 33, so last few seconds to vote. Perfect. Okay, so if I just publish the results on your screens now, you'll see that majority of you are midway. Nobody's fully confident, and there is a handful that are not very confident at all, and therefore I hope that this webinar can help. 4 people have voted that they are pretty much very confident. So congratulations to them. Hopefully that you'll learn a little bit on this to make you into that very competent level. So hiding those results, and let me just flip back to the PowerPoint. Okay, so what is making tax digital for income tax and self-assessment? So we're going to be looking at what is it, who is affected, and when does it start? So what is it? It's effectively the digitalization of the current system. You'll be looking at a whole new process, which we're going to go through as we go along this webinar. But it's effectively getting everybody who currently submits on paper to submit electronically. It also allows for businesses and landlords to basically have an in-depth income and expenditure P&L available to them as they go through the year per quarter. So it basically should allow for better cash flow with businesses. So who is affected? And effectively it is everybody with gross income of £10,000. So that gross income being £10,000 of sole trade or rental or partnership income. For those that have multiple sources, so if you've got 2 businesses or potentially 1 business and 1 rental property, then you will have to combine the gross total of those incomes. So if you've got a client, for example, who has a self-employed business whereby they have turnover of £8,000 and they also rent out a property for £6,000, they will fall under MTD, and therefore they will have to follow the processes which we will explain a little bit later on. But moving on to when does it start? Well, it's effectively from April 2024, so therefore the tax year 24-25. People will be judged on their gross income from the previous tax year, and with the previous tax year taking into account the basis period reform, which is whereby no matter what the accounting period is, the reported to income and expenditure will be to the tax year. So that is effectively the basis period reform. If anybody isn't sure on what the basis period reform is, make sure you drop a comment in the Q&A section now, and we can perhaps touch on that a little bit later. But yeah, so it'll basically be looking at your clients and seeing what their turnover were for the previous tax year. So that would be 23-24, and if they exceeded £10,000, then they will fall into it from April 2024. So moving on to the pilot scheme now, which is only available to certain people. So you've got clients that you would like to basically get them started, or if they're ready to start exploring what MTD is a year and a half in advance, then be sure to point them in the direction of the pilot scheme. So you can sign up to the pilot scheme now. It's currently a soft pilot, so that basically means that there are no fines or penalties for late submissions. It's limited to who can join, and those that can join are basically, or have to be, UK resident, already registered for self-assessment, and a landlord or sole trader. So basically, if you have one or the other, then that is fine. If you've got both, then you can't currently join on the pilot scheme. You can't join if you receive them the HMRC grants, that being the job retention scheme or the self-employment income support scheme, SEISS. So you can't join if any of your clients have received those. And you can't receive income from other sources being anything at all, employment, foreign income, etc. You literally just need a basic tax return, or your client needs a basic tax return to join the pilot scheme of having simply one business. If they've got multiple properties, that is considered one property business, and therefore they could join, but not if they've got multiple businesses, such as 2 self-employed trades. So hopefully that's touched on what the pilot scheme is. Transitioning to Making Tax Digital. Basically, what I'm going to talk about on this slide is what is Making Tax Digital, what is the process, how can you abide by the rules, the law, and therefore just touching on what you need to do. So first of all, what are you required to do through Making Tax Digital? Making Tax Digital will comprise of quarterly submissions, that will be 4 submissions, an end of period statement, which basically includes all the adjustments, and then a final declaration, which effectively replaces the tax return currently. So going into each one a little bit more detail. So a quarterly submission is basically a rough income and expenditure account of the first 3 months of the year. So by default, they run to the tax months. For those that aren't aware, tax months run from the 6th of the month to the 5th of the following month. So the first tax month is the 6th of April to the 5th of May. So by default, the first 3 tax months, or the first 3 months of the year, will have to be comprised quite fairly quickly, within pretty much 30 days of the year, the month end, or the quarter end, should I say, and that should just literally be rough figures of income and expenditure. If you want to get your clients to also include any adjustments in their information sent to you, then you can do, but that isn't necessary. So just bare minimum we'll go for through the rest of the slide would be quarterly submissions of just a rough estimate of income and expenditure. What HMRC will do with them quarterly submissions is once you submit your clients, they will send out an approximate or an estimate of the tax that will be due at the year end. This effectively assumes that all businesses run equal per quarter. So after the quarter 1, HMRC will just times it by 4, say this is what your income is expected to be, or your profits are expected to be, and from that you would have income tax due of X amount. So that is just what a quarterly submission is for. Once you do the second quarter, then HMRC will come back to you and say, right, okay, well, that's basically 6 months worth. If we double that, this is your new updated estimate of tax. Fairly simple. Moving on to end of period statement, or an EOPS. At the end of each accounting period, sometimes known as a basis period, you are going to be required to submit an end of period statement. An end of period statement basically includes any adjustments that are needed, whether that be capital allowances, any loss claims or relief available, any sort of those adjustments. So are also in there, needs to be disallowable expenses. But that end of period statement effectively makes it adjusted for tax. So the quarterly submissions would be seen as probably the accounting profit, so to say, and then the end of period statement adjusts that for tax, as you all do currently, but all in one process of completing the tax return. You'd have your account with probably assuming depreciation in there potentially, and then what you'd do is you add that back because depreciation isn't a tax allowable expense, and therefore you have the tax adjusted profit. That's effectively what the combined 4 quarterly submissions and the end of period statement is. So we've gone through there that is effectively 5 submissions so far, 1 each quarter and 1 end of period statement for the accounting period or basis period. Following that, you'll also have an additional submission for each client, which would be a final declaration. The final declaration effectively crystallises all the information submitted on the quarterly submissions, end of period statement, as well as including all other income. So the final declaration is basically the tax return currently, but you've obviously got the additional submissions, which I've already mentioned. So what you're required to do, you're basically required to be submitting 6 times more for each client, on the assumption that they've got 1 business or 1 property business. We'll touch on if they've got more in a second. But following Making Tax Digital, digital record keeping is required, and that is effectively using spreadsheets with API or bridging software, cloud software such as Go Simple Tax, or mobile phone apps which are available, which also Go Simple Tax does provide. So by keeping these records digitally, it's basically allowing you to have access wherever you are. I always recommend that even if you do have software and you do upload all your receipts, for example, or all your clients' receipts to the expenses, I would also suggest to keep a separate OneDrive or Google Drive, provided that they do meet GDPR requirements, and have a folder for each client on there backed up, so you do have a fallback if there was any problems or issues with any software that you decide to use. As HMRC do say, as soon as you've taken a picture of a expense, as a receipt, sorry, then you can bin that paper receipt because it's no longer required under MTD, Making Tax Digital, because you need to keep digital records. So yeah, I would suggest anybody who currently just goes and completes a paper form for their clients, I would suggest take the first step right at this moment and start trying to use spreadsheets. Get a nice format so you can include clients' details and their income and expenditure, and from there basically try and develop the spreadsheet to prepare for MTD. Alternatively, for those that don't use cloud software or a mobile phone app at the moment, you could jump straight in and jump straight into the technology side of things and go with where pretty much all industries are going down the cloud route. Go Simple Tax being available on internet browser and on a mobile phone app is considered a cloud system, and therefore you can is considered a cloud system, sorry, and therefore you can claim that you are compliant with MTD by using Go Simple Tax. Currently, we do not have the MTD software available. It's currently in development. So when we do a live demo a little bit later on, it's going to be of the current system, not the MTD system, but close to the MTD release, we will be doing a webinar, no doubt, on how to use our MTD system. So moving on from the digital record keeping element of things, and we are going to move on to something that I've mentioned before, but I'll go over it again. There's going to be a minimum of 5 updates per year in addition to the final declaration, which is currently the tax return. But it is worth noting that it is per business. Per business meaning if someone has 2 self-employed or sole trade businesses, then they will have 5 submissions per business. So, for example, for those that have been on previous webinars with me, I always explain the fact that I am a qualified personal trainer and I also have a clothing brand. So for me, once MTD comes into tuition, I will basically have to do 5 submissions for my personal training company and also 5 submissions for my clothing brand business. That will mean that I will have 10 submissions throughout the year, and then I will also have 1 final declaration to tie in it all together. So altogether, I will have 11 submissions to do during the year. Likewise, if I were to only have 1 business and I also had a rental property that earned over £10,000 of gross rental income, I would have 11 submissions. I would have 4 quarterly updates for the sole trade business, 1 EOPS for that sole trade business. I'd also have 4 quarterly submissions separate for my rental business, along with 1 EOPS, and then I would have 1 final declaration altogether, which ties in the previous 10 submissions. Hopefully that makes sense. So all I can say to you is prepare now. You're going to have to look at how you manage your workload currently. You need to see how many clients you've got and how many additional submissions that may mean for you. So on that basis, we're going to roll into a poll 2, which is basically how many clients do you have to which you provide tax advice and or services. So if Leanne, you kindly do that for me. So how many clients do you have to which you provide tax advice and or services? So the options are 1 to 5, 5 to 15, 15 to 50, and then more than 50. So once again, I'll wait until the majority have voted. Whilst I grab a quick drink. Okay, what are we on there? 26. Right, okay. So we've got 10 people that haven't voted. If we get a few more votes in quickly, and then I will publish the results and right, okay. So currently on screen, you'll see the results. You've got the majority with 1 to 5 clients. So for example, if those people had 5 clients, all with 2 businesses, you are talking 55 submissions per year for just 5 clients, which is equal to what 6 people currently on the webinar have done in the previous tax year with over 50 clients. So there's going to be a little bit more work. Fair enough. It's going to be not as difficult, I'd say, to get 3 months worth of records rather than 12 months worth of records, but it will be training your clients right this moment, apologies, to start following MTD rules by either getting their information to you quarterly or having a system in place whereby you have access to their records as you go along. It is worth mentioning that once MTD does come in and Go Simple Tax have got their software up and running, there will be element of open banking whereby you or the client can effectively link their bank account to the Go Simple Tax account. From there, the transactions will automatically download into the system, and you will be able to categorize what expenses are against what business, or whether it's personal, etc., which is a good and useful tool, which hopefully some of you have some experience in already. If not, it may be worth going away and seeing what open banking is and whether you can implement a structure of bank accounts for your clients to ensure that per business they have what bank account only related to that, and see how you can go from there. So deadlines and payments. So let's just see what's on screen. On screen here, we've got quarterly updates. As I've mentioned, they'll be due by the following month, the end of the following month. And I will do a little visual on the screen for you. So, as I mentioned before, tax months run 6th to the 5th, and therefore quarterly updates would be 6th of April to the 5th of July, with the end of the following month, which will be the 5th of August, being the filing deadline. Quarter 2 would be the 6th of July to the 5th of October, with the filing deadline being the 5th of November. You've got quarter 3, which would be 6th of October to 5th of January, with the filing deadline of 5th of February. And you've also got the quarter update for 6th of January to the 5th of April, filing deadline of 5th of May. It is worth mentioning that the 23-24 tax year will have the normal filing date of the 31st of January 25. So that does fall whilst you're doing these quarterly updates, just to add another submission in there for you. And therefore, you will need to communicate with your clients to make them understand that you will probably or very likely have to change your payment structure to cover the quarterly updates, as well as also having the previous tax year full tax return due as well during that first year. So it's all about communication with clients and ensuring that you are prepared and your clients are notified of what is happening. Little thing underneath, you've got another table whereby it's called the calendar quarter election, and this basically changes from tax months 6th to the 5th to the 1st to the end of the months. So by making a calendar quarter election, whereby each client will have to do that individually with HMRC, once approved, they can then do beginning of the month to the end of the month for each quarter. So rather than the 6th to the 5th of July, you'll have the 1st of April to the 30th of June. However, filing deadline stays the same, will stay the 5th of August, which is the end of the following tax month. So it may be worthwhile having a look or having a speak with some clients and seeing whether they want to go to the tax months or whether they would prefer a calendar quarter election. Along with the basis period reform, you would probably expect anybody who doesn't follow the tax year would want to do a calendar quarter election, because that's what they're used to doing towards end of months rather than tax months. Anybody that currently does their accounting period to 6th to the 5th of April, then I would assume just want to stay with tax month quarters. So, end of period statement. The deadline for that is the 31st of January, along with the final declaration. HMRC have said that they would expect the end of period statement to be submitted with the 4th quarter, as you're effectively doing all the accounting adjustments and therefore getting the actual taxable profit figure with the tax adjustments by submitting the end of period statement. So although it isn't actually due at the same time as the last quarter, HMRC would expect the majority of submissions to include that ELPS adjustment. The final declaration, once again, is the 31st of January, following the end of the tax year, and that doesn't change from the current deadline for the tax return. So some good news there. In terms of one filing deadline will stay the same. However, as I've mentioned, you've also got the other deadlines to be thinking about whilst you'll also have the final declaration due by the 31st of January. So hopefully with Making Tax Digital, the fact that clients will be hopefully more on the ball, you'll be able to get a lot more final declarations submitted prior to the final month of the deadline, which is usually January. Hopefully they'll get all the information to you as and when the quarters finish, and then as and when P60s, etc. are received. Moving on to payments, and like with the final declaration, the deadline hasn't changed for making payments. Making payments is still due by 31st of January and the 31st of July if you are in payments on account. There has been some speculation and some rumours that further down the line there may be a new payment structure whereby making quarterly payments. However, as I've just said, it's speculation, hearsay. Therefore, I would just take that with a pinch of salt currently. but it may be some news in the future, which hopefully if you do join our webinars in the future, we will be able to inform you well before anybody else. So that is basically the deadlines and payments. Anybody who wasn't following or anything of the sort, let me know. I'll flick back to the tables of the deadlines and quarters if anybody wants me to. Make sure you just mention the Q&A and we will come back to that a little bit later on. So just to conclude of where we're up to and what we spoke about on this webinar today, get all 4 points up, and we've got what do we have to conclude from this webinar today? So as a bare minimum, there's going to be small changes. I say small, I think they're actually massive. The massive changes being people that have been in self-assessment for around about 27 years, 28 years, I think, will not be like to change the fact that they currently have the full tax year. They can wait up to 9 months and then send in their information to yourselves, and from there they can then get their tax return submitted on the 31st of January. Anybody that would say to my previous clients at my old job, you've now got to send your information in 4 times a year within 30 days of the end of the quarter, make sure that you get it into us, it would genuinely be impossible. So there is going to be a lot of communication with clients required to make sure they understand that this is law. Once it comes in, there will be a period whereby, or there should be a period whereby there'll be no penalties, but repeat offenders will be penalised. And if the penalties are anything like late submissions for self-assessment, which are £100 straight away when you forget to file by 31st, then if you miss a deadline twice in a row, so let's say the 5th of August and the 5th of November, that's £200. I'm assuming if they are the same, that would easily start to tally up for your client. So it is worthwhile mentioning that it is law. They will have to comply, and from there, hopefully it will be a smooth transition into Making Tax Digital. Following that, start planning now. It won't be delayed again. So it's already been delayed from April 2023 to April 2024 due to coronavirus, and basically HMRC and their employees weren't in the offices for, I think it was something like 7 or 8 months. They're still currently not all back to the office full time, but it basically delayed the whole process, and therefore they made the decision to delay it by 12 months. That's not going to happen again. They are very, very keen on getting this into legislation as quickly as possible, and that being the earliest date of April 2024. They've got quite a bit of the fundamentals in place. They are liaising with all the software companies to make sure that what they've got available to them and their clients through the soft pilot is working. And as far as I'm aware, from little feedback that I've had, is that it does seem to be running fairly smoothly, and the software companies, including ourselves, are fairly happy with how HMRC are dealing with it so far. If you have clients that don't or can't join the soft pilot scheme, then I would suggest trying to convince them to follow the compliance now. The compliance being sending your information to you quarterly, along with having all the other income that they may have to you as soon as possible following the end of the tax year. It basically means that you can be more prepared to get these submissions in on time. And for those that have 50 clients, it will be a lot of adjustment to, you won't just have, or potentially, I'm assuming that everyone's got bad clients like I'm used to from my experience in tax, but you won't have 70% of your tax returns due in December and January. You will actually have one per client due every quarter, assuming that they fall into MTD. And then you'll also have the final declaration during the normal time of the year as well. So you'll basically need to plan a time out there. Luckily enough, the deadlines are the 5th of November and the 5th of February. Therefore, leaving December, January, I'd say fairly free. But who knows? It's more the fact of communicating with your clients now, acting on it, and hopefully finding something or a system that works for you. And last one, do you need to know anything further? I'm sure that a lot of you are sat there like that emoji in the middle of the screen now, with your head blown off with information or new information on Making Tax Digital. Do you want to know anything more either about Making Tax Digital, about basis period reform, etc., etc.? Make sure you comment in the Q&A section now, please, as I think there's a poll in a second, and then I'll go on to a quick live demo of the system, and then we will try and get to the Q&A to finish off with. So, poll 3. A little bit understanding about what you think of this webinar is, has this webinar made you more confident with understanding MTD and the requirements involved? So if I just flick back to there, Leanna's kindly started the poll for me, and you have the 3 options: yes, sort of, and no. Once again, anybody that is voting, if you feel as though you need more information, as I can see a few people are voting, then please, please, please put in the Q&A section what you feel you need to know more of, and we can go from there. Whether that be through another webinar arranged with IAB and ourselves, or whether it would be some informative information being sent out. We are happy to work with yourselves as much as possible to ensure that you are ready for MTD when it comes in April 24, just short of 2 years away, which I'm sure a lot of you will think, oh, it's 2 years away, but it will soon creep round. There. So about 30 have voted. Anybody else that wants to vote, please vote now. Also, there are no votes on no. If you are holding back your vote on no, because there were a few more voters last time, then please do vote no, and make sure you put in your comments why you voted no, so we can work on the delivery or anything else. There we go, a few more voters, there we go, perfect. So I'm just about to publish those results, and happily enough, 77% of people on this webinar feel that it has helped them today, which hopefully a few of the 77% are those 4s on the first poll, which have then boosted you up to a 5, and hopefully those 1s are all in that, yes, I'm happy with the information. There's 8 people that have voted sort of, and therefore hopefully I've got 8 comments in the Q&A section as to why you feel like you need more information. So if we hide results back to list, that should be that. Moving on, right, so we're not on Q&A at the moment. What I'm going to do is stop sharing, share screen, and we will go to... Okay, so you should be able to see on screen now the system, the software. This is my dummy account, so I've got all the different pages on there with entries. Once you sign up and you have paid for multiple users, you'll have a normal screen here without all the entries, obviously, and you will have personal details. Click into personal details, you'll be able to update for each client their name, UTR, address, etc., etc. To switch between users, up at the top corner, you've got an add/switch button. If you click that, you will have a list of all clients. So we're currently looking here, and we've got 3 update personal details. This is basically what happens when you add a new user to the account. And then underneath, we've recently ordered them chronologically in terms of UTR number, so you can easily find clients. You can request for a change and have them ordered by name. Let us know on the support, and we can update that for you. So just looking at SA100 user 5, you would press the switch button to go to the new user. Now it's just setting up the account for us, and we've got a new user account. So first option, always make sure you go to personal details and enter the personal details. So you put client name in here, you choose the option of whatever they are, make sure you include all the information highlighted red as we're going along. Format there, sorry, there we go. Other line, no. Just make sure you're reading each question, what may be relevant to you. Scottish taxpayers, phone number, national insurance number if they have one, making sure you include the address details. Sorry about this. And UTR. So I've already got one of them. 1, 2, 3, 1, 2, 3, 1, 2, 3. So we've got UTR included on there. Make sure you include their correct UTR, as once you do save this, the UTR does get blanked out and therefore can't be amended. So make sure you've got the UTR when amending the personal details, and just hold off if you haven't received it yet from HMRC. Marital status, different options there. If you choose married, you can include the date of birth of their partner, so you can claim marriage allowance, but just in this example, I'm going to include single on there, and they're not a Welsh taxpayer. Click save, and you'll see that the system has updated for client name. To add a new page, over to the left hand side, you've got the new page button, click new page, and you've got all different options for the schedules that you would include on a submission. Just make it easier. Adding in the investment interest and dividends, SA 101, SA 100, click save, and it just drops down on the side with a new page in a similar format to the other pages. You'll see that there is, the more I add, they all follow the same format, so it's a fairly intuitive and user-friendly design. Changing between the schedules literally by coming to the left hand side, selecting which one and clicking on what you want to do, what you want to go into, and we will have a look now at editing a SA 103 page. By default, if you have selected self-assessment, you'll have dummy entries. To delete these, you'll have little bins on the left hand side. Are you sure you want to delete? Yes. Are you sure you want to delete? Yes. And on the income section, you've got individual entries to delete. So we've now got a blank self-employment page. Always, again, make sure you go into edit first and include the business name. So for this one, I'll just go personal training. Type in personal, there we go, sports trainer. Address, again, making sure we include the business address in here. There we go. And then again, for your clients, making sure that you answer these questions as and when we're going through. So was the business started after 5th of April? Did it cease trading beforehand? What's the accounting period? Cash basis, all the usual questions that you would expect in relation to an SA 103. If there's losses from previous years, if you want to summarize all the expenses in box 20, etc., etc. I'm just going to click save there now that we have the basic details. On all pages, all very similar. Income, click the plus button on the right hand side, select a category from what's relevant, whether it's SEISS, whether it's sales, commission tips, etc., etc. I'm just going to go on sales, include in here an amount. If I want to include a description, so it says on the list, I can do, so you can either include total for the year there, or if I wanted to amend it, I could press the pen button on the right hand side, change that to April month, and therefore include the month of April instead. You'll notice there that the tax did change because it runs in tandem with whatever is entered on the system. So just in this example, we will change it to total for the year, and we will include a bit more of a duty figure of £15,000. In fact, we'll go even more than that because we've got expenses to include in. Let's go £30,000, and you'll see that the tax due figure is being updated as we go along. In terms of expenses, we press the plus sign over to the right hand side and we select which groups are relevant for our clients. I always use the same examples: car, rent, and phone. Scroll on to the bottom, you do have other things such as if they made payments on account, make sure you can include them in there. Any tax adjustments or capital allowances, you can add those if necessary as well. Once you've got the groups that you've selected, then you've got new add buttons in each separate category or group. Then press the plus button and choose what is relevant. In this example, we will just literally stick in fuel. If you want, again, you can include an overall amount for the year, or you can include just monthly. So in this example, fuel, April, let's say £500. Probably more with the cost of fuel going up currently, but yeah, we'll go £500 and then press save. If we forget that actually that's the total amount of fuel the client spent, and actually their business use of the car is 70%, we can go into here, amend by 30%, because private use is 30%, and therefore we'll see that this should go down to £350, which it does. Likewise, in any of the other categories, exact same method of inputting. Choose what's relevant. Rent for storage, I don't know, and then including in the amount. What I should actually mention is, in line with Making Tax Digital, our current system has the ability to add files. So attach a PDF, which will not be seen by HMRC. This is for your reference only, or your client's reference. So if they've sent in the receipt for the rent for storage of £3,000, press add file, select the PDF and press save, and it will be saved against that record. So far so good, hopefully. We have got SA 103, we have got other pages whereby we can add entries if we want. Income in there, we'll add some interest of £500. Oh, not right. No tax has been taken from this. Do you have untaxed interest? No. And therefore we can save that. And let's also add in £5,000 of dividends. And then reading the questions, are they relevant? Money received in stock? No. Unit trust? No. Non-UK? No. So save. Okay, so we can delete this page. So if you find out that you've got a schedule which you've added by accident, or you no longer need it for the client, then you would select it, come over to the title and press delete at the top, click OK, and that will drop off the system. Okay, there's entry all sorted, there's updating the account all sorted. What we finally have to do is go to the reports page and we can have a look at the tax calculation. Tax calculation is from the entries on the schedules that we've had included: £500 of interest, £5,000 of dividends, and a profit of £26,650. Personal allowances deducted and then into the calculation of tax, along with calculation of NIC, and that is your SA302 effectively for your client. As a more simplified view on things, then we have got quick boxes in front of you here. So you've got a tax liability plus class 4 plus class 2 equals total. Any tax paid at source? No, because we're self-employed. No payments in account were entered, and therefore you've got a balancing tax amount of 473698. Due to the amount being over £1,000, they're not being taxed at source. You'll have payments on account due for your client, which will total 7,026, and therefore you will also have a payment on account in July of 2289 as well. You can download the SA302 at the bottom of the page, and you can also download the SA100 and see how that looks. So just flicking through the pages quickly, as I know we've got 15 minutes left and there'll be probably a lot of questions. You can see here the entries are included where we would expect, and there's also the calculation and the SA 100 pages, which can be submitted to HMRC. You'll see the Save and Continue button. Clicking that and then Yes will bring any further questions which may be relevant. If they've got repayments, make sure you click Yes on here. Include the payment info, bank info, sorry. Claiming to reduce payments on account, student loans, losses. There's all sorts of questions on this Almost There page. Whether the SEISS payments were received, make sure that you do review the entries on here. Once you've reviewed the entries, press Review, Calc, and Proceed, which will bring you back to the final calculation page. Download whatever's needed prior, and then you can do Next Step Verify ID. At that point, go onto there. You'll have your mobile phone number, enter it in there, receive a text, put in a 4-digit code which appears after you click Send My Code, and you will be able to submit the tax return online for your clients. Hopefully that is a quick demonstration. I know we've got questions to answer, but any questions on that, please contact myself or Leanne, and we or even go to support when you go on to Go Simple Tax and ask your questions there. Mention that you've been on a webinar and you have further questions about the software, and myself or one of the support team will be able to help with that. So if I just stop sharing again and flick back to my presentation, there we go. I believe, Leanne, you can now join me and help assist through this period.
Let you have a breather. Yes, can you just put the last slide on for me? Just
Which last slide was that?
The one with the information for the 50% off.
That one?
Yes, that's it. Perfect. Thank you.
I'm just going to mute while I cough.
Yeah, no worries. Okay, so before we start the Q&A session, give you a moment if you've got any more questions that you'd like to ask. We'd like to thank you for joining us today by way of a 50% discount off the software for new customers. The discount code will be emailed to you automatically after the webinar finishes, but I just wanted to let you know it is a limited time offer, so you'll have until Thursday, the 30th of June to use the code. You can, in the meantime, go to the link that's on your screen, gosimpleTax.com/IAB, and you can have a play about with the software, before you make any decisions. The pricing is up there on the screen. We offer multiple return discounts, and the 50% will apply to these prices here. So, for example, if you've got 10 clients, RRP, as you can see, would be $173.99. With the 50% off, that's just going to be £87, and that's going to give you the full access to the software to file for 10 clients. So if you wanted to get anybody using the software in the meantime, having to play about with it, getting them up to speed with MTD, perfect time to use this discount code for you. If you've got any further comments or questions after the webinar, like me, I'm always one of these people that thinks of things after, even if it's weeks after. Just reply to the email that comes to you with the discount code, and I can pick these up for you. Or, like Aidan said, just get in touch with support through the software. So, Aidan, if you're refreshed and ready, I'll let you take over. There's not too many questions today at the moment. Whether more will come in or not, I don't know.
Do you want to read the questions out to me, Leanne, and then
I can do.
Just to get it a bit interactive rather than listen to my boring voice.
No problem at all. So let's have a look for the first one. Before commencing MTD for SA, will the basis period have to be end of tax year? It's not clear when this is to be changed with clients having year ends that are different.
Okay, so thank you for that question, and it also ties in with Carol's question on there about the basis period reform. So basically, or currently, the accounting periods, if you do not tie in with the tax year or coterminous to 31st of March, you may fall into strange reporting periods. So, for example, if you have a 30th of June year end, you will only actually have 2 months of the tax year that you're reporting in relevant to the submission. What the basis period reform is doing is in the 23-24 tax year, all overlap profits and transitional reliefs are going to be included in the tax return. So regardless of whether they change the tax year, their accounting year or not, so to say, they will receive the overlap relief that they have previously got. And then from that moment, or from the following tax year, which coincidentally, well, not so coincidentally, is the April 24, which is when MTD comes in, everybody will be reporting per the months that I mentioned on the slide, because they will all fall within the basis period reform. And therefore, no matter what the accounting year end is, that is more of a different thing. Then that is just more looking at it and saying, oh, they've got a year end of 30th of June, for example, instead of actually calculating profits to the 30th of June and whatever tax year that falls into. So basically, the basis period reform is making every single business follow the first quarter, second quarter, third quarter, fourth quarter for MTD, which is April, May, June, so to say.
Okay, there was a couple of people asking about the basis period reform. So if you just want to let us know if that's been answered there, that'd be great. Somebody's asked if it will be Excel compatible.
Well, I'm assuming Go Simple Tax. So in terms of Go Simple Tax, we will primarily be focusing on actually using the system for recording purposes. And you will obviously have open banking relevant to that. So your clients will be able to attach their bank accounts to the system, download all the transactions, and then they will be categorized as and where appropriate. There is currently plans to include an import feature for an Excel document, whereby given a permitted format, will be able to be imported into Go Simple Tax and then submitted for MTD purposes. Yes, very similar to how we've got for MTD for VAT at the moment, if anybody uses that. So yes, there should be some compatibility, i.e. bridging software for Excel spreadsheets.
Okay, and then we've got a bit of a scenario here. If a taxpayer A is a landlord with a rental income of less than 10,000 and B has other earned income also of less than 10,000, does he or she continue to prepare annual self-assessment tax returns?
Good scenario, Peter. Yes, basically, if the combined gross turnover / income of the relevant MTD sources, such as sole trade, rental, and partnership, then if it's combined and less than 10,000, they continue as normal with self-assessment tax returns. If during a tax year the combined total of the turnovers does exceed 10,000, they will have to apply and join MTD for the beginning of the next tax year. So it's coming to basically say, if in April 24 to April 25, so 24-25 tax year, you have a client that doesn't fall within, but during that year they exceeded £10,000 combined, then for the next tax year they will quickly have to register for self-assessment through MTD, and therefore follow the quarterly reporting procedure. So that alone means that clients have to be more on the ball with submitting their tax return, because otherwise they will miss the early quarterly submissions if they don't.
Okay, thank you. And is your software a simple replacement for the like of TaxFiler and HMRC's own SA submission software? So I could carry on using my preferred bookkeeping software, QuickBooks, and then transfer the overall figures from QuickBooks to your software to submit if I didn't like QuickBooks submission system. Is that right?
Effectively, yes. If you wanted to continue using QuickBooks as your bookkeeping software and then transfer the overall figures from QuickBooks to ourselves, you should be able to export in a particular format, import into Go Simple Tax, provided that the feature is released on time when we first release, and therefore you will be able to use QuickBooks, the bookkeeping, and the submissions through Go Simple Tax. Yeah.
Okay, sorry, I never forgot to unmute myself then.
Right.
So I think one last question now, unless anybody else is going to ask anything, just on the pricing. I've never actually looked at it this way, so you might have to help me, or I might have to come back to Patricia on this one. Your pricing, 10 returns, is this for 10 clients? As the returns per client has to be submitted, does this price include submitting these? So like the pricing there, we've got 10 returns. If they have 2 clients.
So basically, you will pay for clients in advance of submissions. So it's more the fact of if you've got 10 clients, then make the 10 returns payment, and then each additional tax return after that you can add as and when, and you'll be able to add each one for £1. If you wanted to add each client as you're ready for submission, then you wouldn't have access to that prior. You would have to obviously pay in advance for each return, and then once you've got the information, then you start entering the data. So it's payment in advance of entering data.
Okay. I think it's a little bit confusing with that one, because when we're talking about MTD, you're then looking that every individual business of a client is submitted separately. At the moment, they're not, are they? So yeah, so for 10 returns would be 10 clients, and regardless of how many businesses there are, landlords, how many houses they rent, isn't it?
Yeah, so yeah. This is currently self-assessment pricing. We will be looking and no doubt changing the payment methods when we come to MTD, whether that be quarterly or monthly, we're not too sure yet, but this is currently for SA 100 pricing and not MTD for income tax pricing.
Okay, I think that is everybody's questions answered there. I just can't see anybody else writing. So are you happy there, Aidan? With
everything? Yeah, I'm happy.
Yeah. Okay.
We've done it in good time as well,
yeah.
So that's all good.
2 minutes to
go. I'd like to say thank you to everyone that joined, and hopefully I know the majority of you did find it useful, and those that did ask for more information, hopefully they put questions in, and that has been answered, obviously in regards to the system and basis period reform.
Sorry, Patricia's just asking another question. Patricia, because we're coming to the end, I'll come back to you separately on what you're just asking there. Okay. Just on the pricing again, and then we've got a lot of people saying thank you. Okay, so to end, thank you for joining us today, and again, thank you to the IAB for allowing us to present this webinar to you. Enjoy the rest of the day, whatever you're doing, and thank you.
Cheers, thank you everyone.
Cheers.